FedEx earnings are out for ticker symbol FDX. So let's do a top-down analysis. We are now sitting at a market cap of about $40 billion, a PE of 10, and a dividend yield of 3%. In the last FedEx earnings update we did on June 23rd, we said if we couldn't get through that $240 per share level, we would fall below $200, and that's exactly what happened. We are now down another 36% from those levels. So let's now do another analysis of the business to see what's going on with FedEx, whether or not this is a value investment by using our intrinsic value calculator seen on screen, and to see how everything is progressing for fiscal year 2023. And starting with their earnings release here, we can see that they have announced that they have cost savings of about $2.2 to $2.7 billion, and that they're on track to make about $4 billion in cost savings by 2025 through their innovation strategies. And starting with the comments from the CEO, they're essentially saying that they're still navigating this difficult environment. Obviously, we know what's going on with the macro environment, pulling costs, commercial capacity levers, etc., to adjust to the impacts of reduced demand. They're working on strengthening the business and the customer experience. But at the end of the day, they still do have headwinds. Of course, as you've probably seen in the news, rates are still increasing here, and they're saying that this is also going to impact their business. They did also have service challenges at FedEx Express, but there were some good things that came out of the corner, including an increase in revenue. So let's jump into the financials to actually see what's going on there. All right, so when we look at this income statement here, we have revenue here. They have a bunch of different revenue segments: FedEx Express, ground freight and services, others, and eliminations, which make up our total revenue here of $23.2 billion for this quarter. Now, if we compare that to last year, we had a 6% increase overall, so that is good. And we can see here their services and freight segments did actually very well this quarter as well. But then we get to our operating expenses here, and as you can see, if you actually compare these levels, we can see not much has changed, except for here we have a hefty increase to their fuel costs, now up to $1.8 billion. That leads to our total operating expenses of $22 billion, which has negatively impacted the overall total operating income here, down to 1.1, let's call it 1.2 billion from 1.4 billion 1 year ago for this quarter. Ultimately a 15% decrease there. We deduct for other expenses and our taxes, etc., we get net income here of $875 million for this quarter. Last year was $1.1 billion, down 21%. In other words, earnings per share here of 3.3. So again, keep this in mind when we get to our calculations. And although the results so far don't look good, with top line increasing but bottom line decreasing, the management team did mention that the operating income did decline because of reduction in global package and freight volume altogether. So they're really feeling the impacts of the recession, and with lower consumer spending, this is actually what you can expect here from a cyclical business such as FedEx. All right, and when we get down here to our balance sheet, we have current assets. We're looking for our cash figures here. Really, we have $6.8 billion in cash. Long-term debt here, the current portion at least, is $139 million, and we actually have long-term debt here of, let's just call it $20 billion. They have about $6.8 billion in cash. So I'd like to see their cash position just a little bit higher, but they do have total current assets of about $20 billion as well. So all in all, their balance sheet isn't that bad, and it shouldn't be a concern to investors or potential shareholders for at least the current point in time. Now, if we jump down here to our statement of cash flows, we pull down our net income figure of $875 million, add back in our non-cash costs, and we're left with $1.6 billion in net cash provided by operating activities. Deduct our capex here of $1.2 billion. We're left with only $400 million to reward shareholders. What do they do exactly? Well, they're paying out that dividend, diluting shareholders a little bit here, and also paying down some debt. Now, they did also mention that they are planning to do about $1.5 billion in share buybacks this year. So if they can start to produce higher levels of free cash flow, that would really benefit shareholders and the stock as well. But with that information, let's jump into our calculator here for FedEx. Now, we're saying that they came in with about $3.33 in earnings per share for this quarter. If we extrapolate that, we can estimate that they'd come in with about $12 in earnings per share for the year. If we require a 10% return, they do pay a dividend. And if we keep these growth estimates the same as what they've been historically over the past 5 years at 5% for the next 10 years on a 10 PE like they are at currently, the stock will be worth about $173. We're currently sitting at $154, so that's a little bit of upside from these levels. But let's look at this from an optimistic perspective. Let's say in the next 5 years, the recession is over, consumer spending definitely increases back to historical averages. This business can actually grow at about 15% for the first 5 years, then back down to about 8% for the 5 years after that. on a 15 PE, we'll be looking at about $350 per share. Now, this is more than a double from these current levels, and that's actually what investors are currently hoping for. In the worst case scenario, let's say the recession drags on for longer, we can only grow revenues at about 3%, and then that actually stops altogether as more competition enters the space. On an 8 PE, the stock would be at $129. So that's your margin of safety investment level here for FedEx. And this is, of course, assuming the worst case scenario. Now, we are at a less than 1 price to sales ratio and a 1.6 price to book ratio, along with a PE of 10, meaning that we are in that sort of margin of safety investment area as it is. So with FedEx here, keep an eye out on any potential bounces that may come in the near future, especially now that we're approaching some significant support down here at 140s levels, potentially down all the way into 120s. We should see a bounce somewhere near here because we are getting pretty cheap here for FedEx. But that is my analysis and my opinion on the stock. Please do your own research and due diligence when it comes to investments. But if you enjoyed the analysis and the value investing perspective, please leave a like and subscribe, and I'll catch you on the next one.